Bam, welcome. Tonight is Friday, December 18th, 2020, year of COVID, and welcome to the market wrap up with JD and Mo. I'm JD, and that's my boy over there, Trader Mo. What's good, Mo?
What's up, my brother? How you doing, man? I'm great.
Good, man. Good day. Good day.
Yeah,
It's a learning day, monumental
yeah,
day. It was
yeah.
all those words. We have a nice group in here. I just want to let's just jump right into it, man. Instead of first, I want to do the member spotlight. We have 19 people in here. Um, what's holding you guys back from taking the trades that you see? Because I know all of us, when we were coming through, there have been times when we would see something and say, oh man, that stock is going to do this. That stock is going to go up. Is there something holding y'all back? Because a lot of the majority of the people we know in here are researchers. They study, they have ideas, and then sometimes people just don't take the trade, whether it's, fear to pull the trigger, fear of risk, so I think that's something that we could the kids distracting you. I understand that one. I understand that one. So the trigger. What are your thoughts on that, Mo? Because what were there anything? Was there anything that held you back in the beginning?
Well, in the beginning, yes, and still now. Like, I don't think that ever. I don't know. I don't think that ever goes away. But like in the beginning, it was definitely confidence. It was definitely, um, you know, trusting what I saw and what I researched. Trusting my picks and my entries and price targets. And that confidence is getting a lot better. Now, especially over this year, that confidence is a lot higher. I think now it's more. It's either I don't have the time to watch the trade, or I don't have the capital. Like it's out of
Right,
risk
right, right, right.
management parameters for my portfolio. So that's really it kind of now.
Okay, okay. Well, shoot, man. I just think the undercapitalized could be something for everyone. The fear of that first step, putting it out there. Uh, I put it like this, man. I went to Grambling, and there's two brothers in this room that showed up tonight with the same last name. I won't call them out, same last name. And they helped me get over my fear of stepping out on the line across, crossing over into a new realm. Because I mean, you ever seen a brother that will make a pan of brownies, half regular, half with X-Lax, and let the whole crew step into it and just sit back? Well, he's on the call. Shout out to you, brother, Ephraim. What's up, E4? We have J Ford. I just had to shout my family out, man. So I thank y'all for coming in. But the point I'm making, guys, is one of the things that we can do. I, paper trading worked for me, but then just stepping out, like in small amounts, and there's an amount called I don't I don't care amount, or without cussing. It's that amount that you don't care if you lose. After you, now, I'm not just saying just go out and just get into options and make an option trade, but I'm saying once you prepare and you've studied, you move forward. There's a certain amount, there's a threshold that it won't affect you emotionally, because that's what's going to start happening is the emotional attachment to money, and the emotional attachment of like, oh man, you lost $300. And when you look at it, the dudes on TV, Jim Chanos was shorting Tesla for 6 years. He's lost over probably 400 million off that short, that kind of thing. And his fund is still active and people still give him money, so it it's a scale, it's a perspective. And I think, guys, it just, we have to step out. What do you think about that? Your not account size, but your trade size or your investment uh, allotment, how much you put
I
at
think
risk.
that goes like right into the problem, not problem, but I guess why I wouldn't take a trade is making sure that the trade that is taken is not uh a significant portion of my total account. You don't want to put, your, especially your first, few trades, you don't want to put your entire account at risk. I was talking to someone about that today or yesterday. And that kind of also goes into what I was telling them was that, I also, for me, don't necessarily recommend paper trading because, I
Hmm.
mean, I
I
think
feel you.
it's, you need those emotions for when the money's on the line, because you need to be able to deal with those emotions for when the money's on the line. And also, a lot of times paper trading is way outside of a realistic starting amount of capital, so it's easy to let stuff slip, or go, go hard on contracts if you're starting with, $100,000 in paper money, but you wouldn't start with $100,000 in real life,
Yeah,
so
yeah.
like with all of that, I think that, definitely you got to get in, like, that's the only way you're going to get comfortable, that's the only way you're going to feel those emotions and deal with those emotions. We talk a lot about trader psychology really being the crux of trading. Like, after getting a few, technicals down, a few techniques, and studying a little more, is really about the emotions and the psychology. And you need to have money on the line, you need to have, that's right, Danielle, skin in the game, in order to feel and deal with those emotions. So, and while you're doing that, you don't want to have all your entire account, you know what I'm saying, at risk. You want to,
Ah,
chunk it up little by little, so you can deal with those.
you said the baby diaper money is in this trade right here, and I
Like,
don't know how to
look.
get out. But okay, just the other side of that, I'm I'm a fan of paper trading. I'm a fan of virtual trading. Just the fact of, if you do it the correct way, where you set it up with like, hey, I have $186. I'm gonna trade 100. Or I'm visualizing I'm saving up to get to $500. But the reason I say paper trading is because before you go live, you want to know how to basically maneuver through your trading platform, because you get on that trading platform and it's live, give or take of what you're trying to do. Sometimes you won't know how to get out. Sometimes you won't know when to get in, and you can practice that uh, with the right trading software. It'll you can mimic your moves, because I know the first. I'm a live dude. I like. Let's go live, man. Let's go live. I don't want to practice. And when I my biggest hangups were execution, because I was, in, and I would stumble. But I mean, you have time. We think we don't have time when we get in a trade, but if you lay it out properly, we have time. But and I'm 100% with you with about that pain. You got to feel that emotion of like, like you get in there and you see your girl walk by, you doing your little market thing, huh? Your little stock market stuff, huh? Okay, yeah, all right. How much you make today? You made, $7, huh? You spent all day. I'm I'm making the joke, but there's some people out there dealing with that, and
Hmm.
or on vice versa. The husband saying, "I so you studying this again? You watching these brothers again doing that?" But guys, I'm telling you, the time we're putting in right now, time you do, it's building up. It's building up that equity, the sweat equity, and when we put it in the market, we have to shock our system, have to shock our system to where we can recover. Like, and that kind of leads into what I want to do. The fight or flight response, man, kicks in when that real money's on the line. That's perfect, man.
Yep.
Uh,
Yep. I want to address something real quick.
okay.
In the comments, somebody, Laurel asked, are the emotions the same for options as when trading stocks
Mm-hmm.
themselves? I, to be honest, I want to say no. I think the emotions are a little bit more elevated with options, and
Yeah,
that's
yeah, yeah.
because, with
Expiration.
options you actually can lose your entire investment. Your option investment can go to zero. With stocks, I mean, the stock will have to go to zero, and that is very unlikely. Like, even JC Penney's still holding on around there somewhere. So, like, it's very difficult for a stock to go to zero, but the option can quickly. Like, when that expiration come, it will. So I think you know, the
Oh, we got
okay.
to get your boy Arkell out of here,
Yep.
man. Arkell,
I
yo,
think
sucker, man. Let me come in
come
here.
on,
I'm gonna come
man.
get you. I'm gonna come get you, man. I got your IP address.
Yep.
And
Appreciate you, bro.
did he jump out?
Um,
Did he jump out?
must have.
Let me
But I
lock
think
this.
I
Lock this
think
mic.
the emotions are higher with options because uh, you know, it just because the option can the value can go down to zero. So but
Okay.
that's what I wanted to address. Arkell kind of threw me off a little there, but it's all good.
Yeah.
That
Well,
just let
look.
me know you're doing something great, brother. Keep it going.
Yeah, man. And
Let's
Arkell.
roll.
I was looking for AT. Okay.
Hey,
Here's it leads us into me looking at Tesla, man. I've been tracking Tesla for months. I've been putting money at work. It's called risk on, and the trade has been living up to what it was. But the big thing was today was the S&P inclusion, and where Tesla was going to be added to the S&P 500, or as my wife would say, S&P 49 499 and Tesla. You know, so it, on the chart on the screen right now we have the 5 minute chart. I like to do the 5 minute chart to where we can see I can see enough movement without where it's not a scramble, not just a crazy move, but it gapped up this morning, sold off. It's kind of hanging around, but I was waiting for an unbelievable move to happen because the word was that all the fund managers, ETF, the tracking funds, they were all going to maneuver within the last 45 minutes because the way that they're going to get into Tesla and acquire Tesla, they have to acquire it at the close of business today and the closing print. And it's crazy how the closing print changed. Now, I'll get this to you. Closing print really, it was really five, six, what, 660, 664.99. That was truly the last tick. After market, after market, it started, it tweaked, it shot down, then it shot 695. Now look, guys, one thing that we talk about all the time, price has a memory. Price support and resistance. We will draw a support and resistance line right here, give or take. If I can do it, let me draw it right here, guys. I want to I want to get this perfect. Just bear with me while I share another screen so I can do it right, guys. And Mo and I always talk about price has a memory, price has significance, and it come people come back to that price level at all times, whether it's a week later, 7 days later, 25 days later. But Bloomberg updated the final tick, and the final closing price today was 695 instead of the 664. But if I added volume to the screen, which I'm not right now, volume came in and they said hedge funds, fund managers sold their current shares, sold it off, and lowered the. Now, these are movers. These are heavy volume movers. I'm talking about on the 5 minute chart, we were like millions of shares sold and then bought back with a bullish engulfing candle right there. Came in, closed 695. That hit 695. This spiked up 695. These are all buys at the end. Uh, Everybody spikes up to 695 and it stops exactly. That's not a coincidence. That is what that's those were market movers that had the same orders in place, the same marching orders, the same. So we're watching Tesla, guys. This is my prediction for Monday. Um, we're gapping up. That's what I say. We're gapping up, but I'm not going to say I don't know how long because at some point in time, here's what the next move on Tesla is. Um, it's going to run for a minute, but there is an area of it has to be equilibrium, has to rectify all the way back down here to the 412.45 area. That's the last gap on this chart, give or take. They filled this recent gap the other day. Other little gaps were kind of filled already. The last gap. So let's say we run up over 700 because we could easily run up over 700 because we're at 695. That's what they marked off. And you can gap up $30. Man, Tesla can gap up 80, $90, $100 in a day. You know, then it can run off and pull back 70, 85 to 100 over a 2 day span. So be prepared if you're getting in. So we're looking at that. I'm still in Tesla, but the play that I've been calling out for a couple of weeks, a few weeks, was the ARK follow through. It's the ARKK, a poor man's Tesla play. So Tesla's 690.95 per share. You look at ARK. ARK follows the same trajectory, same pattern. Let me put it on both screens right here, and you'll watch how, because ARK has the highest allotment of Tesla in its ETF of anyone in basically in the major ETF industry. So when Tesla moves heavily, ARK's going to move. And if you see it on the screen, similar patterns, the V-shaped sell-off, bam, ran up, V-shaped sell-off, bam. So look for ARK. The ARK play today was very cheap. It was a $234 play that you could buy that option. I'll keep updating that. Now the play is about to run its course. The move, the inclusion is happening. What do you think about this, Mo? Where it's buy the rumor, sell the news, where all the volatility's going, going, going. It made its move today. There's still maybe a little bit of a pop left and some follow through, and then it sucks the volatility out and lets people, but they don't want S&P doesn't want a lot of craziness though. What are your thoughts on that, man?
Um, it's weird. I don't. That's possible. That's possible. That's what I think about that. And the volume dropping out. I
Not Monday
I'm
though. Not
one.
Monday. I'm just saying, like, I think it's.
No, just in general in the future. That's what I'm talking about. Not specifically Monday. Like
Mhm.
I see that. We looking over the next few weeks. Like I see that as being a possibility. But what I know from past cycles, past seasonalities, past tendencies with this coming week, with next week, with the Santa Claus Rally, what I've been expecting from the market and how this month has already played out. I don't see that happening.
You don't see what? Because
I don't see I don't
you said
see
volume. I said volatility.
you
You think?
said the volatility drop.
Yeah. You think the volatility is gonna stay up?
Oh, okay. No,
Not
I thought you
volume.
said
Volume's gonna be
volume.
heavy, man.
Okay, yeah, no, I
Since they're
think
in
the
S and P,
volume's gonna be there. Volatility,
it's gonna because it'll stabilize. I think, man.
I think it's gonna start trending trending up. So no, I don't think like as far as like big drops and large recovers. I think today was probably that day for the next couple of weeks.
So the volatility will drop in that case, and it'll stable. So price will
Stabilize, right,
stabilize.
right,
Yeah,
right,
yeah.
right, right, right.
That's I I think so too, man. But I still think we can go up higher with that with this because they bought this up like like they really, people talking about manipulating a price,
Mhm.
and they it was the perfect time. 45 minutes until close, they sold this off. It sold off on Tesla, sold off here, and the next play for me, guys, and this is right in Mo's backyard, in his back pocket, is a spy because Tesla is now in the spy, and it's going to be probably the third highest weighted stock or between the top five. And so for every $11.11 move in Tesla, the S&P 500 will move $1. So if Tesla pops 11 bucks, it will make like the same with Apple. When the Apple moves, it can move indexes. Tesla's going to be a market mover. And now it's going to have the chance to pull the SPY with it. And the SPY options are always, there's so many expirations. They're always consistent with the pricing. I wonder, I mean, and there's still some room on the SPY to run, Mo. Well, give the folks your SPY breakdown, please, sir. I mean, let us in, dog. Let us in under your hood, Playboy, please.
All right. Well, um, I guess, first starting off with, the S&P 500, I start off fundamentally. Like fundamentals, run and still rule everything, regardless of what, people may say. And fundamentally, December is a strong month for the stock market. It's it begins the strongest period for the stock market. And there is a phenomenon in the stock market called the Santa Claus Rally, which runs kind of a fit, officially I say from Christmas Eve up through January 3rd.
Hmm.
Some other people or analysts or whatever may say the entire month of December into January, or the end of or the middle of December 15th. But I consider December 24th to January 2nd, January 3rd, the Santa Claus Rally. And there is heavy statistical evidence of positive market activity during that time. Actually, the almanac calls it the only free lunch given in the stock market.
I like that word.
It's yeah, free lunch. It's a steady trend that has
Hold on, have
held
you ever had the
since.
free lunch at school, man? That's horrible, dog.
Hey, remember Fried Chicken Day?
Go ahead, go ahead.
But I mean, it has been researched, back, to 1950. So I mean, it's something that has been strong. The trend is there. Also, with December being a strong month, there is some fundamental um, backing for the S&P 500 continuing higher. I've also been able to see some prints as far as like buys and buys on different calls and different option strikes for the S&P 5 for the SPY. Man, like 373, 375,
Easy, easy.
is very plausible.
Oh
Uh,
yeah.
Monday or Tuesday.
Uh, that's
So
mm-hmm. That's the
there is
spy
room to
play.
run. There is room to run, and if you see how it was bought up in the afternoon today, I think man.
Yeah.
And there has not yet been a stimulus announcement, but I think it's gonna come over the weekend. That's gonna gap up and make things pop on next week, going right into Christmas Eve, which is on Thursday. We might have a small pullback Wednesday or Thursday, but that'll be a buy the dip moment. So buy the dip and allow
Yeah.
history to be on your side. But that's what I think about the SPY. It has room to
Okay.
run up through January.
Well,
Like there is no ceiling right now.
look at the anomaly on the screen, man. We talk about volume. We pay attention to volume. Down here, guys, right here is my volume chart. All these candles. You can go red or sell or days when selling pressure is higher. Green is purchases are more buying. Buying pressure was stronger. And right here, it tells you the daily amount, the daily print of volume, 42 million. So Tesla gives you, it'll give you 8 digits daily, 35 million, 33, 222,000, 17 million notes, 32 million, blah, 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 42 million. So 42 million Wednesday, 56 million Thursday, 222 million 126 today. That, and they're still not done buying, because we need to find out, and they're going to release tonight, because you can go to the different ETF websites and find out their allocation, because they have to be compliant with the right amount of Tesla shares. There weren't enough shares available at one point, and so the supply and demand comes into play. I mean, now this an anomaly like this does not happen all the time. That's just like the Big Short didn't happen. This isn't a black swan event. This is like that. This is like the perfect alignment event. That's why I've been putting. I put the baby's money in here. I put the diaper money in here. We had a dude at Grambling, man, our sports information director. Everybody got refund checks and everything. And he disappeared, like disappeared. And we would pray for him after practice every day, every day. Dear Lord, please bless Stanley. Let him, hopefully protect his family. We thought Stanley had been abducted or something. And my boy, he is actually on this call. He was like, man, Stanley is in Jamaica, made the little joke. Man, they found Stanley down off in the island somewhere with the money. And so the point I'm making is money coming in to Tesla. That money's coming into the SPY. Uh, the ARC is still viable.
It's money coming into a lot of things. It's money coming into tech. It's money coming into chips.
Talk
So
on those sectors, man, because it's. I said we were going to give them a few picks for the Santa Claus Rally. You know my picks. I'm still looking ARC because ARC encompasses a lot of Roku, a lot of Square, a lot of
mhm.
Tesla, things like that, things within that sector, fintech. AMD and Apple looked really good for me.
Yep, that's what
Uh,
I was gonna say. AMD, Apple, Microsoft, Amazon, Nvidia, Take Two, Activision, EA Sports, Disney, possibly Walmart going into
let's put Walmart
um,
on there.
Target. Man, like it's a gamut.
Yeah, Walmart's riding that trend line right
Yep.
there. I'm going daily charts, guys. Just for right
Hmm.
now. We get a break above that 147.72, which
Hmm.
that's a piece of cake to do.
Hmm.
It could run for that rally if it falls below these. Let me zoom in. Falls below these levels because there's always at certain times when you're not trending, you're in a range because we're at the bottom of that range. A lot of times they come out if it respects this trend line, which is looks like what it's doing, and I can redraw it. You come off that bottom really nice, but you look for a break above previous, like that's a previous high, but it was a sell off. So you need to, if you can get above that and really get above this candle right here, which was the high 147.72. Walmart's comfortable with the little run, with the little push, and but you set, guys, you have to establish like, hey, I'm only willing to risk this amount because it's all probabilities, as we say. We can say, and you find a dude that guarantees you the money and says, "Hey, I guarantee you'll make this," and take a picture of him because he's lying. There's no guarantee. There's a guarantee of a probability that it may possibly happen, you know, but the you want the probabilities on your side, just like the casinos know that it, the probability of them winning is greater over a hundred lot set of plays. So you mentioned um, you mentioned
You pull
AMD
up,
and the chips, huh?
yeah, AMD,
And
AMD and Amazon.
Amazon.
Pull up Amazon.
Yeah, let's do that. I keep hearing, and there a lot of people talking about those levels on Amazon, and people can participate. Can't they buy
Hmm.
fractionals on Amazon? Fractional
I believe
shares?
so. Yep.
Because it's trending, dog. Like it's coiling
Amazon
up.
has a,
Oh,
historical tendency to go up at the end of the year as well. So I know a couple of traders that are already well positioned, have been for like a week and a half,
in anticipation of
waiting on
this.
that historical tendency, um, that Amazon has. So some folks looking at 4K, which could definitely be possible by January
Uh,
3rd.
okay, let's. I'm gonna chart this real quick, but okay, the last time a guy was just talking about, I was thinking like, okay, let's say Tesla runs its course. I've been playing Tesla since early November, and it's
Hmm.
one of the best plays I've had in a long time. And I was like, what else moves consistently with the type of range of payout per capita, like for bang for your buck? And the only thing I could really come up with was Amazon. Like it's a
Yep.
little it's pricey, but if we get in, if you make that push, you make that thump, You get the right, I think the moves, what is it, the risk reward is if you put it
It's
in there,
worth it.
is worth it, worth
It's
again
worth it.
the position,
Yep.
man. Uh, let me line this up real quick because I have a nice wedge pattern that it's looking to break, guys. On my screen, I'm zooming in a little bit more so y'all can see. But wedge pattern for Amazon. I'm drawing my trend line. I just need two taps really, and it's kind of I was trying to hit that. It was a little distant. I'm not gathering those up there. They're a little bit of anomalies for me, just a little outside my range. But I'm looking at that. We have some price consolidation where this is a wide trading range, but it becomes narrower, narrowing down to where price is consolidating, it's contracting. So when it contracts and this is a big mover, it can do one of two things. It can break out, break down. What we're looking for is a breakout, and I would prefer that breakout above 3263.51, give or take 3249.42. You get above these previous highs right here for the like Thursday and Friday, and you might get that in the pre-market on Monday. And the thing about it, Amazon, when it does break out of like a little pullback wedge flag right there, it might have a down day, but it pops and pops. The moves are significant in like 3 days of price action. Boom, gap up, and
Mhm.
we get out of that
$300
range.
moves.
Say it again.
Mhm. I said $300 moves, $400 moves.
And if you move it in a little bit further, the moves if you when you do scale up, those are moves that sustain traders for the entire year. The right
Mhm.
type of move during, like you said, your friends were actually in position anticipating this historical move.
Mhm.
So I know they always say have some dry powder ready for when you see the move that you've been waiting for. It's like,
Mhm.
and they keep equating it to hitting as a hitter. It's like dude is in the box and taking a pitch, and you're waiting for that pitch to really lean on, man. Instead of it's a lot of free swingers and it's a lot of takers out there. When I say taker, you just watch everything go by. Oh, I saw that. I saw that. Oh, I saw that. And but capitalizing on it. But with that being said, the higher flyer market, if the volatility comes into play, I'm gonna show you guys one more thing. Your emotions, the trader psychology comes right into it. It comes right into it because Mo, our charting class, we're gonna break down charts, but you
Mhm.
can be the best charter in the world, and then you just when the lights come on, you get flustered, you get you analysis paralysis, you're frozen in the headlights. But the more is that why you do your Tuesday night call charts with Mo to where the more reps we get, the more comfortable we get with moving within this arena.
Folks don't know, man. Charge for Mo is a lot more for me
It,
than it. It helps me a whole lot more than it does, other people. So, I
puts
mean,
you on
I
the
hope it helps
spotlight.
a lot of people, but it helps me. So,
Yeah. Okay. Shout out to the people say, oh man, if you're teaching people and blah blah blah, and you're not trading, you're a sucker, man. Blah. I used to hear that, and I'm like, man, the best way to become an expert is to
to
learn it and
teach it.
then to teach someone else to help. And
Yep.
now I think this Amazon's big. Square is moving. I think AMD was set
Hmm.
up. I I,
AMD.
I hopped out of AMD, man, because dog, it's been all Tesla, man, Tesla and Arc. But the perfect pullback for AMD happened, which it always does. Right here, guys, what we have on the screen, trading range, the anomalies right there. You saw the other two anomalies on Amazon's trading range. Boom, boom. Now, the more each one of these candles represents one day in time, and the more candles we get, that's the more data. That's data because we need data to realize like, okay, this thing is a trade in the trading range. After a certain period, like, okay, I'm not buying up here. I'm not selling down here. So basically, you buy low and you'll sell high within that. But once you finally break the range, that's when you're saying, okay, we got the breakout. Now we're going to see a retest of this range in most cases. And then you get the real run. So Amazon, but AMD has done that, the breakout, the pullback to retest, and it put the, I kind of let the tip in joke die, didn't I? I've let that die for weeks. I put the shout out to wifey. She's on the call. Hey baby, Lawana
What's
Ellaby.
happening?
Yeah,
Miss Ellaby?
yeah that tip in joke just kind of died, but it was so good. But anyway, it created
Tip drill.
a little mini trading range, and it broke out. Now this section has retested, guys. So
Hmm.
AMD is set. It's like you get above 97, 92 right in there, that's a runner because AMD is going to frustrate you right here. You get out like, oh, it's going, and it pulls right back down to your start point. It does it all the time. It break out above it, come back down in there, and go back to the bottom of that range. Well, there is a chance it goes to the bottom of this range, or if you get the break above that level, write it down, guys. 97, 92. Want to pull up an option for them, man? See what folks.
Sure, because the hundreds is look
That
it's sniffing out 100.
that's the, that's what I was in. That's what we
That's the
talked
price
about the other
target.
day. Um, when you called it out,
Hmm.
January 1500. It was priced very well, guys. Look, this is the options chain. We're looking at call options. Uh, January 15th, 2021 expiration date,
Open interest.
$100 call. And we look at things called like open interest to let us know how many contracts are out there. People have money on the line. 40,000 contracts, 40,893. You would pay $3.50 by 360. Basically, you multiply that by 100, so you pay $360 to get into this. And the the, the strategy you're looking for. I mean, we want to run to 100. You have 28 days for it to get anywhere near it. When you start getting towards it, your this premium will go up in price, and you will capitalize on the value, on the increase in value. So what you do is you want to protect your investment when you get in to say, okay, I paid 360 bucks. I'm willing to risk 75 or 100 to make 200, or I'm willing to risk 100 to make 150. Whatever it is, you establish that before you get in, so you don't get on Facebook and say, hey man, I'm in this option, what should I do? it,
Right.
and you're the expert. When you get in there, you are the expert, and because everybody's going to have an opinion on your move.
Yep.
And what are your thoughts on that, man? Because I like this 100, this
Yeah,
100.
the 100 is beautiful. I mean, the open interest is there, the delta is there. Um, I think 100 is the price target. It may shoot past it, but I think 100 is like that key area it's going to come back to, and maybe uh, hover around between 90 and 100, or 95 and 103, 104, something like that for a while. So I like it. And you're right about setting your how much you want to risk at the get go. That actually kind of digs into a point I think Deirdre asked about clarifying, uh, taking all the money. Well, I think you were talking about. Well, I think if I'm correct, when I was discussing that the option price can go to zero. That's what we mean there. Like, because if it doesn't go your way, like you want to have an amount where like I'm gonna risk this much on this trade, and when it's done, or if it hit my stop loss point, or it hit that point, then I'm gonna exit out and keep the remaining part of my capital. Because if the stock price keep going down, like the stock price don't have to go to zero. but that option price can and will if the stock price keep going down. So you can lose
Hmm.
the entire investment of whatever option you get. But no, they don't necessarily have access to your bank account unless maybe you have a margin account and you go over margin and
They
they
still can't dig in the bank
I
account.
yeah,
They
exactly.
can't get
They
in your
they
bank
can't get
account
to your bank account.
unless
So
you know how your
I
grandmother
don't do
thinks they can
margin
do it
accounts, so
over the
I
phone,
don't really know. But
which they started out they
um,
can though.
you
Go
got
ahead.
to know how much you are willing to, of course, risk from the get go. So yeah, I agree with both those points, bro. And that option does look good.
Um, I got one for you, man.
Hmm.
Look, all right, space. I had been calling space out 2 years ago, give or take. Made its run, took profit, kept a few. Um, it I shorted space. Well, shorted. I put it in. I called it out for a short on puts, and it's still going. It's going to be hunting the 21 region, give or take, and maybe even lower. Um, it might try to fill this gap all the way back down here at the high of 1647. I was in puts, but I moved my money to get into that arc play. I'm still milking Tesla, but the thing is, breadcrumbs were popping up other day with space. They
Hmm.
failed their test. The test flight failed. Then Chamath Palihapitiya, their co-founder or CEO, uh, he sold a good portion of his shares, and he never bails. He never bails. So I checked it out, guys. We have a bear flag on space right now, and just play like there's price action that was in that gap right there. Had to sell off, pull back, continuation. It doesn't mean it has to, but the Bears have taken control of this one right now, and it needs some type of
Where
base in the
support
catch.
is.
Huh?
I was gonna say that's where support is.
It does.
That
It
lower
does.
level.
You need something to catch it. You don't try to catch a falling knife yourself, but it doesn't come back right up. Things a lot of times they don't do that. If they do, that's called a dead cat bounce, and it goes right back down. So you let it hit the soft landing and try to find a rebuild and recovery. Um, that leads into Mo's talked about the Santa Claus Rally, how important and significant that is each year. How many years you go back, Mo? That over
Uh,
20 that you've studied.
this for me personally as a trader, I've been following it for 5. This is year 5. 2022. Yeah, this is year 5. But as far I mean, that's at like as trading and having in my notes. But according to the almanac, this goes back to 1974, 75.
So
45 years.
45, 47.
Mm.
Dun, 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 dun. Yeah. What is that volume? What is that volume? Okay. Um, guys, th- we it's repetition. It's repetition. It's price levels, and it's consistency from the standpoint of like, oh, when it gets to this level, buying comes back in. When it gets to this level, they sell off. So we establish like, okay, and a lot of times we can get tunnel vision, but you'll anticipate it, but you can't. We can't out we can't jump in front of price with our entire account. There's times when you take that speculative move to be in position in anticipation of a historical event, and that's when you establish like, hey, this is my businessman's risk. I'm risking 3% of my account. Whatever your amount is, and the rest is going to be strategically in place. I was thinking about Mo. Okay, as we move forward, what are the areas I'm talking about this year, the next few years? Because Kathy Wood is catching love from people because her accounts over the last 5 years have been up over 500% return. And it wasn't all the FANG, it wasn't Microsoft, Apple, Facebook. It was like you find the stocks that up
Mid cap and small cap software companies.
and
Matter of fact, speaking of small caps, while you're talking, pull up
yeah,
IWM.
That was that's been so sneaky, man.
I've been talking
IWM.
about IWM for months.
Guys, look at the trend. When you see a trend like that's going up to the right, we know we can draw our trend line. It doesn't have to be perfect, but it's catching the bottom of that. That thing is hitting there, bouncing off, hitting the ramp and skirting. It's
From November. Yeah, this was another one I was alerting in October, and this is one you guys can put in your notes for historical tendency. The Russell 2000 has a historical tendency for strong upward movement from November to January. So it's a lot of traders, it's a lot of fund managers that psychologically know this and place this, trade. And if you go back, study your weekly charts, go back throughout the years, do make sure, you go to before 2007, 2008. I
mm,
prefer going back if you can go back to before 99, 2000. A lot of times I go back to, maybe 87 and start from there. But, this also has a strong historical tendency for the Russell 2000, the small caps, to have strong returns from November to January. So,
and guys, the option chain on this is reasonably priced. It's not going to
mhm.
be outlandish. Where let's just take a look. So
And a
with
lot of these are going to be small software companies, tech companies, and biotech companies, which goes right into your point with the ARK investment in their returns. That's where I was going with that,
perfect,
tying
man.
it all together.
I'm going out 63 days. That's I mean I like the numbers. People might not want to spend $700. They might just, but okay. One thing, if you want to get into options, don't cut corners on price. Don't say something's cheap. Don't say it's and you get it because it's cheap. Because the quickest way to lose that money is you get something down here in the lower. And we talk about it in our options class, but you have to have a set of parameters. And
Price is what you pay, value is what you get.
let them know it, man. Because I think guys, put it in the chat over the next 3 to 5 years, up to 10 years. What are the areas that you feel have the largest runways and room for exponential growth? Because there's certain sectors and industries that are being discounted that aren't. I'm not saying discounted as in cheap, but like you know they're trying to call Tesla. Okay, I'm gonna stay on Tesla. They try to call Tesla a car company when you really when they really don't want to they can't quantify why Tesla's doing what it is doing. They say it's a car company like Amazon was a book company 10 years ago, 15 years ago. All they do is sell online books. All you do is spin records, spit it out. And it something different about a company that causes disruption, causes anger, causes frustration. You can't predict or quantify unexpected like exponential growth. There's something called Wright's law. It used to be Moore's law, but Wright's law has taken over to where, hey, it said, oh, this new technology will come in about 18 months. 6 months later, innovation has outpaced our our expected return, and they outpace you. Now, Tesla right now for autonomous driving, they have 15 billion miles of charted data, big data, from their cars. The second closest is Google with 25 million. So 15 billion to 25 million miles of data driven. So Tesla is in the driver's seat to to push forward with like when you think something like, oh man, Elon's they didn't meet their quota on that. 6 months later, the autonomous driving comes out, or things like that. So it can exponentially grow. But I do feel on Tesla, there's going to be a pullback. There's going to be another chance to get into a position. Um, what are your? I think AI, genomics, and cybersecurity, uh, like the human genome biotech area that we talked about back in June, are going to
Mhm.
be areas, augmented reality, or areas that EV areas that we need to pay attention to. Um, I know you have some thoughts on that. I mean, we touch on something every month.
Yeah, I think we talking, 1 to 3 years, 1 to 5 years, something like that. I like to think. current trends that's strong and that will continue. And so I see chips, I see EV, and kind of maybe a like a B to the EV is charging. Maybe not necessarily batteries in general or just batteries, but charging
The
stations,
stations,
charging
dog.
companies. I think that may emerge as something. Blockchain, most definitely, will
Okay.
continue, and will become more corporate. We already have, and we will continue to see more tokenized stocks, more tokenized companies that you can purchase using crypto. I think we'll see that as well. And I also think, in the weird way, consumer discretionary. I think,
Gets
as things
overlooked.
continue to grow, yeah, people. I mean, the world is still consumers. I don't think that that's going to change anytime soon. So
XLY.
I see
Yeah.
consumer discretionary as, something as that kind of staple thing, and then healthcare kind of is, you know, um, I don't know. It's
Not
it's
healthcare,
it's
because
it's in a
we
weird
can.
way.
It's old folks in the healthcare, and it's
Right,
biotech. You go AI
right,
with biotech, human genomics,
right,
and then you have the big ones that are they can blend both with like they can go bio and pharma within one, like
right.
the and that those are the ones that have a chance to, or like Merck will acquire a
Hmm.
genomics lab, just like hey man, I'm gonna buy you up for 35 million because y'all are advancing further and you don't have the money to do what we can do with that. Um,
Hmm.
I I think man, like what you're saying, that consumer discretionary socks, straws, toilet paper, rare earth minerals, because they're gonna need them for the batteries, and China just landed on the moon. They're not just going to the moon to hang out. They went and pulled back some dust, and Japan brought back sediment from an asteroid. It took a 6-year mission to mine on there. So the rare earth metals and minerals are going to be key. Those are areas just, and y'all can sit and talk through that on your own. You don't have to take a class to come up with these ideas. You don't have to spend
Hmm.
money. You come up with your ideas and then you research. Okay, Yahoo Finance, whatever it is, and just ask questions like, where do I go to find out the best blah blah blah? Or go to Investors Business Daily. Uh,
Hmm.
it's just that I just think the more we talk, we're becoming fluent. Everybody's becoming fluent in this language that has been kind of shut off to 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 diverse groups, people of color, to single moms, to hardworking dad. Families that just have other things that it's like, hey man, I can't worry about this Apple stock. I got this light bill money. It's not. So now that we have fractional shares, no commission, we can build up an account. You can build it up, and it might take a
Yep,
little bit longer. Might take a
yep.
little, but the next, it's going to be common vernacular. All this stuff is common vernacular, and we can do it, man. I'm telling you. And hey, while I was talking to you, Mo, somebody signed up for the charting course, charting
Awesome,
class on the 26th. So we
awesome.
have one spot left. Uh, uh, just I'll put my email address in here. Mo put his, but we're doing a charting class. Like we would like for you to know a little bit about the market, but we do homework. I send out stuff to get you familiarized, and it's oh okay, Merle. All right, yes, that was you then. Great,
All
great.
right, Fonseca. Can't wait to have you.
And
We're gonna
so
dig in.
it's the 26th through the 26th, 27th, and 28th. So the 26th and 27th are going to be the two main classroom days, and the third day is the bonus day in the market. But if you can't make that, I'm in the market every day. Mo and I will, we're gonna give you your time in the
Yep,
market. So because that's why we did it on Saturday, Sunday, Monday.
yep.
The idea is to, people. A lot of times you take a class for 3 times the amount, and then it's all videos. And we want to get you in the market and see what it feels like to put your money in there, or paper trade if you don't have money. I didn't have the money when I first started. I paper traded for a year, and then but it does build a false sense of security. Now remember that you think you're a bad man until you put that real $100 in there. So uh,
True that.
uh, anything you want to talk about before we wrap, Mo? Um,
Um, Let me think. I think I touched on everything I wanted to touch on. My thing was mainly the Santa Claus rally, that, and the kind of drill in, not that, you know, um, it's guaranteed, but there is a historical tendency that creates higher probability of success. So,
Okay.
to start to take note of these things like the Santa Claus rally and the dates that it happened, the seasonal strength in the small caps, and start to take note of when those things happen. And what we talk about in DCG is having the bias. Like, we can't control the market. We don't know what the market is going to do. We can only take what the market gives us. But when we do our research, when we plan, and we plan out our days, plan out our weeks, plan out our months, we can have a bias. We can have an idea of what we expect from the market, based on history, based on our trades, and then go in and use sentiment and volume to adjust where we need to adjust. Let the market do what it do, and make our adjustments when we do that. If you set your price targets out, you set your stop losses out beforehand, then you can adjust whenever the market gets there. But if you just get into a trade and it start doing whatever, you don't know what to do, then it's because you didn't plan it out. So
That's the panic right there. That's
that's
the
that's
panic.
we don't want to panic. So our thing is to plan it out, have a bias, have something we set and can expect, and and not just getting them one day. Okay, well, I expect this to happen. Like, we definitely do the research, and have that to back it up. But have a bias, have something to go in, and then use
Well,
that, and use it to your trading, use it to your
what's the date again? Fonsec would like to know the date um, for the Santa Claus
24th
Rally.
through January 3rd.
24th.
Yep. So I'd be looking for lows on Wednesday afternoon, or Thursday. And Thursday is Christmas Eve. That 24th, it will be a half day in the market. I believe the market closes early. So assuming we get some strength on Monday and Tuesday, and possibly Wednesday morning, I'd be looking for entries on any pullbacks Wednesday or Thursday.
Beautiful. Well, and guys, I'm recording this. I'm putting my email in here. Email me if
That's
you'd
what
like a
I am looking
copy.
for.
And Laurel, uh, um, you asked about the class. Email me so I can send it to you. December 26th through 28th. On the 26th, I, I'll email it to you. It's
Mhm,
evening, and then afternoon on that Sunday, and then that Monday we're going to be in the trading room early in the morning,
mhm.
uh, and going to look, just watching the market go. Oh, the Kwanzaa coupon, man, they canceled it, man. Habarigani, brother. But they canceled that, man. Yeah. Uh, they said until 45 leaves office, they won't recognize that at the comptroller's office. So we'll get you next time. We'll get you next time. Well, y'all look, if y'all have questions, email me, let us know. Thank y'all for
Yep.
coming.
You can
We got to
reach out
shout
to my
everybody
link
out,
tree
man.
and schedule a call, or you can reach out to me on Facebook. I'm very accessible. If you like some more information on DCG, let me know. I can get you in. More information on the course, let us know. We can get you in, and we are discussing possibly an options course in January and in February. We've been getting some
Yeah.
feedback on that as well. So um,
We had planned it
let
for
us
just
know if you're
February,
interested
right?
in the options course. Um, we
Let us
likely will
know.
have one in January and February. So
Well, thank you, Kimberly, Crystal, Laurel, Kylan, Wifey, LaWanna Ellaby, Marcia, Mr. Fistar. We got Jay Ford and Ephraim Ford, my teammates from Grambling State University. Ulysses. See, so every time I say Delta, they'll throw it in the chat. They'll throw a little, a little noise in there. So I know we got the bros in there too. So it's a lot of love going. So Aqua, Cassandra, Deirdre.
up there you go.
Did somebody drop it in there? Jay Ford and
Yep,
Jamelin. Jamelin's on here twice for
man.
it. Kimberly.
I got so much love for the bros and the sisters. I was almost one. I'm thinking about pledging, like,
Hey man, we
city
might just
chapter.
we,
So
we just stop right there, man. Stop right there. We put that on silence because it's
He's doing pledge. Nah, see, they were off the yard when I was in college, and then I ended up leaving. So, and I didn't want to do it
When the
around.
dog's ever on the yard, man.
Man, like the year that I left.
Okay. Okay. Well, look, fellas, I'm gonna stop the recording and